Claro, fácil. Pues bueno, bueno, entonces, pues vale. Vas a hacer un escritorio.
Can you hear me now?
Yes, yes, I can hear.
I said we are going to start with the price delivery.
Okay,
So, like price delivery, when you open its content, this is where I started before.
mhm. Tiene una tablet.
So, what is price delivery? Price delivery refers to a way financial market moves prices in 10 price level. So, like let's
Okay,
do it like in practical. Now, this any candle represents the top of any candle is supply and the bottom of any candle is demand, right?
okay,
Like in any time frame, like any candle, and price moves logically, So like in this case, you see this candle's high
yes, yes,
is supply, this candle low is demand, this candle high is supply, this candle low is demand. In
okay,
old candle.
okay,
So what we basically do is we don't use this thing to trade. We use it to determine direction. Like we don't use it to execute trades. So
okay,
like we use it to determine direction.
okay,
As you can see in line chart, this is how it looks, right?
right,
Like just break the case.
right,
How to come up with directional bias. Move to a higher time frame.
Mhm.
Price delivered to resell.
So like you can see this is 3 month time frame. And I will clarify everything when we start looking at the chart. I know now you are a little bit confused, but everything will be clarified.
okay. Which time frame is this?
This is 3 month time frame.
Okay,
Like
okay,
I said, we use it to determine direction, not execution.
okay,
So like this candle, like if you come, what you'll be looking for is inefficiency. So any candle with inefficiency is valid for price to deliver to it, right?
okay,
So like this is this candle has this inefficiency. Just like similar to other block, but other block is for entry, but this one we are doing is for getting the direction. That's why we are, I would say minimum you should be taking it on weekly time frame above to get directional
o-
bias.
okay.
So like in this case, you can see this candles high
Yes, yes,
is supply. So in three
right,
months time frame, in 3 month time frame, what you have to put in your head is in any time frame when price reach deliver to this candles high is going to react. So it's just like determining a pinpoint before getting into like where to place your entry to get the sniper entry, like getting the direction. Maybe prices from here, you say, okay, this is the recent candle with inefficiency. Price has to deliver to it before it reverses. So which means you already know that in higher time frame, which means in lower time frame when you are actually trading, you know the direction, you know where price is reaching to, and you know where the level of the action is going to be. So you see
okay,
price deliver after 1 2 the cat candle, which is called price delivery. And this second
okay,
example is what we call immediate price delivery. So in immediate price delivery, you see after this candle supply, the next two candles, this candle immediately come and deliver
okay,
to it.
okay,
So as it deliver, what you'll be doing is this is 3 month time frame. You know you can't just put your entry execution in this time frame. what you have in your head when this thing happen, okay, the bias now is going to turn bullish as price deliver to this so time frame, supply is going to turn bullish. So like
Okay, it
as
should be
price,
third candle or second candle.
yeah, like this is the candle that push up. So you see this
Right.
candle is where the inefficiency occurs, and this next candle, the second candle, this one, it
Okay.
immediately it immediately drop and mitigate this. This is called immediate price delivery. Price
Okay.
immediately weaken and tap on it, which means you go look for entry in lower time frame. So
Okay.
let me play one video for you.
How to come up with directional bias. Move to a
Like this is before, this is after. So I had the before when I was doing the
How to
analysis.
come up with directional bias.
Okay.
Move to a higher time frame. Price delivered to recent inefficiency. We have immediate price delivery, which makes the low protected. Use Fibonacci 1.618 projection for target. Move to a lower time frame and look for your entry model. We have this trend line liquidity as our target, and mark this low with tiny imbalance below it as my entry.
So you see what happens here?
Yes.
What I did with that price beating in 3 month time frame is just to determine the direction.
Right.
And I can see price deliver to the supply of that 3 month time frame. I executed.
Okay.
So let's back to it now to clarify things more. So let's open 3 month time
Can you
frame.
show some examples?
Yeah, that's what we'll be doing now.
Okay. And we have to use this price delivery on 3 minute only or any time frame?
No, no, not 3 minutes, it's 3 months. Higher time frame.
It is monthly.
Higher time frame like 1 hour.
Yeah, you can use it, but for I can say that is for very, very short scalping. Very, very
Okay.
short scalping.
Then which time frame you prefer?
Yeah, like I said, it's not for execution. So I say minimum I check is like weekly or I would say daily time frame minimum because I'm not looking for pinpoint entry. I'm just looking for direction where price is delivering to before it turn back into its direction.
Okay.
Like we will come to entry model. This is just for getting the direction where price deliver and so like in this time frame, this is 1 monthly time frame.
Right.
So in this monthly time frame, we are starting from here. So we'll be looking for candle with inefficiency that price has to deliver to it. So let's start going. Mhm.
Okay.
Mhm. So let's say you open like you are looking for direction. You open
Okay.
one monthly time frame because these higher time frames they are useful. You don't have to say like you don't have anything to do with them because you are not a swing trader. No, you have something to do with them.
Okay. I'm not able to hear your voice clearly though.
So can you
Can
all turn off your mic so that the noise can stop
okay,
converting
okay.
inside? All right. So this is let's start from this candle. Let's say I open monthly time frame. Let's say that is January 17th. Let's say today is January 17th and I open the chart and I see something like this occurring from here. Like this is all part. I can say everyone can tell gold is bullish. So you will be looking for price to deliver to an entry that's going to give you a bull run entry, not bearish. So let's start from this candle. This candle supply, if you mark it, you see price never delivered to it until August. So which means you'll be sitting on your hand or you will move to weekly time frame if you are aggressive to trade because you are just looking for direction. You can trade this in other strategies or in the entry model without using the price delivery concept. So when price deliver here, this is the supply. So when price deliver, you are not just going to trade like this. No, you are not just going to trade like this. It's just that you have a pinpoint, which means you look at this candle, so you can mark the body up from the wick and do something like this. So you already, so what you have in your mind is, okay, this is a place where I'm expecting a reversal. What's next? You move to lower time frame, look for the entry model that will come later in this class. We'll come to it. Look for an entry model, execute, and you shouldn't be targeting like overall high or something. Always target the recent high, or like just quit scalping because you are not trading the monthly time frame. Maybe you are going to find your entry model in 5 minute time frame. So if you find it in 5 minute time frame, maybe that means you are cutting. Maybe you might get the entry somewhere around here, and maybe just targeting somewhere around here. That's enough. Just target low. Don't always go for the overall high. So let's say you execute this trade. What's next? Then you look for next candle
Okay.
which
Okay.
inefficiency. Which candle is next? If you can, we keep coming. This is where we take a trade. So we are moving from here. So this is the next candle we are expecting price to drop to. Price never drop to it. Price keep going. As price take out the high, so okay, this is monthly time frame. We can't be waiting, sitting on our hands for months. We are just like trying to predict what is going to happen next within the coming hours. We are day traders. Within the coming hours, we'll mark this. So we just leave it. Price never deliver to it. Which candle is next? This candle. So this is like low probability because we all have this inefficiency, and these imbalanced things. Everyone will be like, it has imbalance. This is no perfect place to place trade. But if you are following the just price delivery, this is the next candle, and after the next candle, we have a push up. So this candle's high is very important. Even if it didn't turn the price all the way up, we must see a reaction, like you can see. So in like this reaction in monthly time frame, if you open this reaction in 5 minute, 3 minute, 15 minutes, you can catch few pips the reaction, because price definitely must react every time it's delivered to a supply zone, or like even if it didn't like reverse complete, it must react. So we are cutting the react in lower time frame. That's why sometimes I trade 3 minute time frame high, because it has to be short scalp. Moving forward, this is the next candle. Price push up, price never come. Now we move. Which candle is next? This one. But this one, unfortunately, there is no any imbalance or inefficiency. So we move to the next candle. Which is the next candle? Is this one. This candle is high. So after we have this candles high, you are not doing anything. You are just trading the reaction that is going to occur when price drop to that candles high. So as you can see, like this one, price deliver all the way to this. So we will jump into our lower time frame to trade this zone to look for buy. And what we will be targeting, we'll be targeting like this low or this low or some few. It depends on which time frame you see the entry model. Then you trade that time frame high. Let's say you open 5 minute time frame and you see your doji somewhere around here. So as you execute, that means you are putting your stop loss below this low, targeting this high. If you move forward, which candle is next that push up? It's this one. So you can see in this one, price dropped massively, and I will definitely say this trade has high probability of hitting stop loss because the week is too much. But maybe before the week, something like after price, because I know definitely price must react. So maybe we might have something like this, a little push up for a drop. The others like few pips to catch, but this is like invalid. This is losing trade. You can't even cover it or like try to make it look like a winner. It has to be, maybe if you trade, it might hit you a TP1, but drop. So you keep moving. What next candle has inefficiency? This one, no, there is weak. This one is weak. This one is body. So we move here. This one is again immediate price delivery, because you see the third candle after this one, the second, the third come and mitigate it immediately, and the push was massive. So, like I would say, like immediate price delivery is more effective because most of the time it's push up. As you see here, you or mark this zone after price drop. This is you open monthly time. You mark, you have this one in your head, so you'll be there in your 5 minute time frame. Just the level 1760 is when price drop to this level. I have to look for a entry reversal or something like that. So you can see price immediately come tap and shoot up. You look for your entry. It depends. Your target is going to be depend on the time frame you see the entry model. Maybe 4 hour, maybe 30 minutes in any time frame, because we are trading one entry model doji. So we mark the zone and look for our doji within that zone, because that's our reversal point. So we keep going, price start dropping. So as we are bullish, we are not like interested in any bearish move. So we just like keep for this, like from this high, this drop. I know a lower time frame is like it's a huge drop. So if you catch up that it is going to be turned bearish, then you can apply same rule. This is monthly time frame, you can move to the weekly time frame or something like that. It depends, because you know what drive the price is fundamentals. So maybe you have one good fundamentals that assure you that the action must occur. Then you can move to lower time frame, continue selling until the fundamentals flip or something like that. So if you keep looking for bullish, this is the next bullish candle, but there is no any push up that creates inefficiency. Which one is next? This is the next one. This one too. There is no like inefficiency. The next candle immediately cover it. We keep going, This is the next one. This is weak. This is weak. Drop. So we can continue from here. So in this case, we have this candle, but price never come and like deliver to it and tap on it. So maybe this one will keep person waiting. Price never come. Then like you move on. And like one that have the doji entry, definitely this is monthly time frame. This pattern. This pattern is doji pattern. Like this is a perfect entry. But this one, but we'll come to it later. So we are pushing up. We have this candle. This candle too is create inefficiency because body close above it. So the next candle should come and deliver. And you see price deliver to this inefficiency and react. We are trading the reaction. So as it deliver, don't just jump. No, move to lower time frame. Look for confirmation. If you are SMC trader, look for your change of character before using the entry model. But you have in mind, you have to the idea in mind that we are at a reversal point. So we keep going. This candle took price low, price weak in. But this is kind of trade that you have drawdown, because as the price you saw is it weaken a bit. And in the best place to like put the overall stop loss is always supposed to be the low of the candle that's in between, like the recent low. So like this is the inefficiency. This is like, let me draw it. This is what happened. Price go up, come down, go up again, and come down. So this is the pattern. So your stop loss should always be somewhere around here. So we keep moving. This is the next candle. The push was massive, maybe fundamental, we don't know. Price never come to deliver to this. We keep moving. This is the next one. Price never deliver. This is the next one, but candle never close above it. This one too. And the next one that candle close above it is this one. And you can see this one too give us immediate price delivery. But the next candle immediately come and mitigate it. So you move to lower time frame before the entry model execute. Which candle is next? We have this candle. This candle unfortunately price never tap. Almost tap. Maybe in other trading view source in gold, you might see price might tap it for reversal. Which one is next? This one is next. The price never delivered to this one. Which one is next? This one. So you can see this one. I think this one is the recent one I used to execute last week. One trade, one swing trade. I mean, this is where it started. Price like this is immediate price delivery. This is the candles high, and you can see the next candle just tap on it, and I move. I think was it 5 minutes after my entry, and I executed.
Okay, have you taken this swing trade?
Yeah, that's one swing trade I'm running.
Okay, that 5,000 turns into $1 million. That one.
So you see, I use the week. I like it's like it give me confirmation to hold.
Okay,
So you
okay,
see
okay,
this
okay,
zone,
okay.
you put 200. So what's next now? Let's say the next candle open in 10 days. My focus will move to this candle. Maybe the
Then
next candle will immediately come and deliver to this. That's how it happens here. So you might see because the end level in 10 days, maybe price this candle will come down. And the next one that will open, maybe it will come and deliver to this one. That is our immediate price to as price deliver anytime price reach this level, I must look for and buy entry, whether scalping, whether swinging or anything.
okay.
Now let's move to the entry model. So the entry model is like where we took the where we execute after we have this formation, how to execute, what to look for. So personally, I execute trade in I would say maximum nowadays I trade 15-minute time frame, but my favorite time frame is 5-minute time frame to execute because that's we are looking for a low drawdown, so we have to use lower time frame. So I think I'm using for entry I'm using the FX CM. So you can see there is many noise because I keep any past data and go through each of them. Let's move 15-minute time frame and refresh. Hmm. So this is like an X class. So let's draw a diagram. So everyone, like, if you open your eyes and look at this chart, like in any situation, whoever person you're asking, what is this trend? We tell you this is bullish, which means you will be looking for buy setup always. So now in many strategies, like commonly SMC, what SMC traders used to do is mark liquidity, look for order block, and put your entry here, stop loss below the low, target the high. I think that's the basics of SMC. So for us, we are not looking for order block. We are looking for a doji candle because doji has a story to tell. Doji candle like that level where the body close, it's a key level. Definitely, it's a key level because like fundamentally, what I would say psychologically, a level where price open and come back at that level and close, it has to be a psychological level. That's the format in doji. So what we will be looking for is within this leg in the 50%, not the premium zone, in the discount zone, we will be looking for doji to form in the discount zone. So let's say we have our the doji occurs here. Let's say the doji occurs here. So what we mark our horizontal line to place our entry exactly at that level. And we target the overall high. Or if you are a risk reward trader like me, you set your risk reward. Like for me personally, I trade 1 to 3. That's very realistic. We don't go down 1 to 5, 1 to 10. That's realistic. So it depends on your style and you choose which one to participate in. So now we'll be waiting for price to come down. And I would say like I used to say this like 80% of the times if our doji setup works out, 80% of the times it came out sniper entry and we go through the my previous trades. 80% of the times you won't see draw down. And let's like you see all these multiple lines are my previous trades. Each and every one came from doji. And we go through them now. Like because I've been like trading this doji thing I think for almost 2 years plus now. That's my core strategy. Because they say like the market makers are always targeting what the masses are using. And now the masses are trading SMC, which means any manipulation should be planted in SMC because that's where the masses are now. And that's why I say I can't stick to SMC because we are the targeted like people the market makers are targeting to manipulate. That's why in SMC so you find they will show you anything you are looking for in the chart or at the end. Part of planet. I think let's just catch a place and start from here because these past trades I think they are infinity because I couldn't just move. Wow. I think let's just cut it because there is still much. You can see that it's still multiple lines. So I think it's better we just started from one. You don't have to start from the beginning if we are this much. The one drag and just dump the other one. So let's start from here. Let's finish. Let's start from we are going to start with two lots. You see in this leg, I think the doji I use in 5 minute time frame. And now I don't want to switch to 5 minute time frame because everything will reset. We have to start this dragging, but we'll change time frame later. This is the first example. Let's start from this. This is the doji I like. I always said this is the you can clearly see the trend is bullish. So I mark this doji. I can tell this has to be a news. So when news came out positive, price just dumped straight to SF. Not even like that fake hope, just dump. And this is the next example. As price is dropping, I look at the leg and find my doji, and this is the one I found, and I place my entry and I target this low. And you can see price perfectly give us the snapper entry as usual. We just mark doji, we don't mark other block. Mark the body, the open and the closing body, just put your horizontal line at it. Targeted below. And you can see here, there is another doji I marked. Let's see how it went. When price take out the high, let me tell you the reason why I changed price for the buy. You see this high got broken. We some bullish, and I marked this doji. I think price, you see that's then price come back. Didn't give us sniper entry at the double. You see, that's why I always say don't always target the overall high. Always target recent high always. And you can see what I target after this drop. I target the first high, which is this one. I don't go for this or this. I target this one. This one too is lower time frame doji, like 3 minute or 5 minute doji. No trade, no trade, no trade. Keep moving. So this is the next trade. And you can see this one too. You see what I use? I mark this doji. Like I didn't like let this thing confuse me. Like we have this inefficiency. This supposed to be the extreme order block. I don't trade that. I trade doji, and I probably see this doji, and I put my horizontal line and put my limit order. You can see this one too. Sniper as usual. And all this came from me getting the bias first. Like I always say, bias first. Don't just go for a technical first. No, bias first, direction first. This is another example. Price is dropping. I mark this doji, this one. You can see a sniper entry also. And I target the recent low. And this is the next example. Then I mark this doji. You see price contact. So this is the reason why you should always like mark the recent low. Look at this. Like my plan was always 1 to 3. So the low didn't give me 1 to 3. The low is going to give me 1 to 2.5. But like I didn't follow the plan. I said let me just adjust it a little bit to 1 to 3. And you see unfortunately price come to even 1 to 2.8 maybe. But never tag my 1 to 3. I learned from this. I say always follow your plan. And this is the next example. You see the doji and you see the entry. And price take out the high and we turn bullish. And what I use this doji. And you see the entry too, like zero drawdown. And I target the recent high. And keep moving. And look at this one. You see the doji I marked. You see the entry tap. You see there is nothing, no imbalance, no anything related to other block or anything, just doji. I mark it. And price tap and reverse. Sniper perfectly. So like every trade I took for the past 2 years, every trade I took is based on doji. No, people might be confused because in the screenshot you might not
You
see
you
doji.
you
And what
mean
happens is
you
maybe I see my doji.
you mean that you are not
with-
using all dodges, yes? Only
Yeah, no, I'm not using like I'm not just randomly marking doji and trade. No, it has to align first with the direction and price is price deliver is going to is that point where I see the doji in delivery zone and it aligned with the direction. Not just like I don't open chart and just see like this doji and just mark it whether buy or sell. No. It has to align with the direction first. Like this, marking the doji trade is the last step in analysis. It's the last step. That's why I'm basically like mostly catching 4 trade per week. Because on my VIP channel too, you can see it's just 1 to 5 trade marks per week. Not just like randomly mark dojis. No. If I don't have today, I call it a day. This is higher time frame example. We'll come to higher time frame. So look at this example. In the little adjustment. Here you see the doji. I like you see where the character got broken. So I say, okay, let's test this. And you see, I mark this doji, and you see the sniper as usual. And you have this example also. You see the doji, and you see sniper as usual also. Targeting the recent low. So if say I was using random doji, then I have to mark this one and look for buy. But it doesn't align with the direction, so it's useless. Now price tag going up. What happened? Look for doji. This is my doji. And this is the entry targeted the recent flow. This is just like scalping, short, very short scalp. Because it's like getting in 8:30. It's just like less than an hour trade.
how you find that it's your doji, but not all doji?
Yeah, like I said, first thing first is direction. So I know that the price is bullish. So I missed this doji at first. First, I missed this entry. Supposed to look something like this. Target 30% low. So what's next? Look for next doji to form.
Uh,
Then this doji form. And it is in this level from this low to this high. It is discount zone. When the doji is in discount zone, you are place it and buy. So by this time, any doji I see that is not in the direction, I'm not going in because I miss on. I also some still fails. But I used to delete the lose because I want the chart to be clean. Because you see, my chart is very noisy now. Too many lines. Mhm. Look at this one too. This is where the doji came from. If I adjust this to this is how the trade is supposed to be.
But what about mitigated doji, bro?
You see it?
What about mitigated doji?
Hey, and doji I would say doji is one time use most of the time. One time use.
Okay, it should be one time use. Okay.
Yes.
Okay. Recently, you
Mm.
took a trade that $5,000 flip into $1 million. Can you explain that trade, matlab, logic?
All right. Let's come to the level first.
Okay.
Now this is the doji. But this even though it's not sniper entry, but at least it work out. You keep moving, you see another doji entry. So with this kind of entry now, you get this doji, maybe like you have mark this doji and you trust your God, you deposit 5k. As price come to this level, like only if you are used to seeing sniper entries. So why not going with the big leverage? Because you are not expecting a drawdown that will blow the account. And we execute. We open big lot. Um, as usual, we used to see sniper. And this formation too is doji formation. I would say maybe in 30-minute time frame, this is a doji. So can you see I mark this doji and I look for buy? You can see price tap. And then this is the next doji I use for buy. We keep moving. This is the next trade. This is the doji. So look at this example here. You see, I have this doji and I have this order block. So what I did, instead of abandoning all, I used my doji as entry and I put my stop loss to enter the order block a bit, so that even if it is like the order block is valid, it won't hit my stop loss. And you see at the end, price never come to the order block. Let's move to the next one. It is September 2024. We are almost there. We look at this one too. You see the doji, you see the sniper entry. Like, I didn't target this overall high. I go for this one because maybe price is more like after that one is going after the other one. If you keep moving, so just like take your time and look at these three examples. You can all see where the entries come from. Shall we? You see this one, you see the doji, you see the doji, and you see the doji. And for this one too, I did the same thing. I mark my doji and I mark the other block below it, but you see this time the other block win. Let's keep moving. This one too, it has to be doji in like maybe 3 minute time frame or some or 5 minutes. No, I basically prefer using 3 minutes. 5 minutes, sorry. So, and let's keep moving. And look at these trades too. This one need a little adjustment. This is the doji. You see no any inefficiency. You see this doji entry. I get this. I didn't even go for the overall high. This one too. This one will overall high. This one has to be doji in lower time frame because like any trade is doji for me. So if it is not visible in this time frame, it has to be in the other time frame. Look at this short buy. This is the doji. And this is the target. If say I do something like this, then it's 1 to 6 or realistic. It's not real because the target is percent higher as usual. And keep moving. Mark this doji. Look for entry here. But unfortunately, price never get to that level. Look at this trade. This is like few minutes trade. This is the doji. You see, as price mitigate the doji, just a little down. News come. Pew. Straight to stop to SL. Excuse me. Maybe supposed to let's change time frame. And let's see, we are almost at the end. This all lower time frame. This is stop loss. This is the doji I used. And this one, I think this is now September. Here's another one. This is for this. Another one for this. Look at this entry now. Just tap and reverse. Zero drawdown. This is another example. This is the doji. So let's move to lower time frame. Let's go for 4-hour time frame. So I have examples in 4-hour time frame too. Now, are you all in? I can hear like a beefing. Hello?
Yes, we are here.
All right.
Yes, yes, listening.
All right.
Can you explain that trade?
All right. Let me see. Now you I pick for our example. I can see I use different sources for different trades. This one too has my 4-hour past data. So when you look at this example, this trade seems like an order block trade, right? Hello? This one looks like an order block trade, but this is not order block trade. You when we change time frame, you see which setup is this. And look at this one. Look at one doji here. 4-hour and look at the trade with the outcome. Target here, another one for sale because we already break structure. Price sniper entry as usual. Look at this one too. This is another 4-hour example. 4-hour doji. You can see I speaking just reversed. This one too, this is higher time frame, and we'll come to it. You see there is no doji here. No, definitely there is doji. We'll come to it. This one too. This is the doji. This is the doji. And you can see price never like tag the full TP. Price speculate. Like if you keep moving, this one too, it has to be like maybe 15-minute example or something like that. And look at this example also. This is the doji. You can see it. This is the execution. You see, I tend to use one doji twice here, and hopefully it work out. Or it's not advisable. I ask you to do this. So me too, I stopped doing that. Using one doji for two trades. This is the doji I used. I drop. This is the doji for this sale. Short scalp sale. See price perfectly. Just respect it. And if you keep moving, you keep moving. This is the next one. So example we have. You can see there is one, two, three doji. Like three doji, good confirmation. You see, it nailed it perfectly. Three doji, good confirmation. Sniper entry. On this one, I write 3H, which means the doji is in 3 hour time frame. So let's see. I think this one is not the high. I can come back to area and check this one. And it is a 3H. Hope you can see it.
But
Very good.
yes, I see. But how are you distinguish that this is the doji which you need, but not other you don't need?
Yeah, like I said, if the dodgy is in discount zone of the leg, like this one, where is the leg? This is the low. This is the low. This is the high,
Yes.
and the dodgy is in discount zone.
Okay, I understand you now. Okay, that's how you are find your dojis. Yes, it must be in a
Yes,
discount zone. Yes, only.
yes, discount zone in the leg where it occurs.
Okay. I- In a 15 minutes also you finding in a discount zones. Yes. 15-minute
Yes,
dodges. Okay, I got you.
and I'll advise you to stick to like 15 minutes down. Look for your dodgy and 15-minute time frame down. And we have these two setups. You can see them. You have this one. Go to the is not that clear, so maybe other time frames on this one too. Maybe other time frames. And look at this example. This one made a little adjustment. This is the doji. No, I enter late. That means this is the doji. See the spike price just there. And after press take out this high, I mark this next doji. You can see spike. And we have this example. Meaning the doji has to be in higher time frame or lower time frame. Change time frame and candle. This one too. The doji must be somewhere else, but you can see look at this doji. These two dojis give us perfect entry here for two. Like this one too. So I'm looking the one I do that flip. When you do that's me it I guess. This one too. I think this is it. You are no. The one I did that flip. It has to be recent example. I think this is it. Sure. Yes, this is it too. Sorry. So I can't forget. I was looking for those in higher time frame, and then I say, okay, let me move to like other time frame. Maybe the move already started. Because at first I was expecting price to zoom, expecting price. We have this doji below. So I was waiting for price pickets. Then later on I discovered that what if the doji is already mitigated? This candle that mitigated it. You see this did not like immediate mitigation. Then I started moving to lower time frame to look for the entry. So I can't forget, like I said, I always go from 15-minute below. So maybe definitely the entry of this trade has to be from 15-minute time frame below, because the trade gave me like a perfect sniper entry that I didn't like have the drawdown, and I was using trading stop, so it has to be maybe 15-minute time frame. Let's zoom. No, just like 15 minutes, then 5 minutes, I guess. Let me move to 5 minutes. Yeah, definitely it has to be among these time frames. And the purple line came from where? So let's maybe move to 5 minutes or 10 minutes. Like 5 minutes, 10 minutes, 15 minutes, 10 minutes, 5 minutes, 3 minutes, 2 minutes. Like definitely we must see dodgy, because that's what I trade. So in any trade it has to be there. Maybe probably this time frame of it.
Bro, my mobile charging is over, so joining through different mobile. Please accept it. Hello.
Hello, I'm here.
My mobile charging is over, so joining through different mobile. Please accept it.
Hello, can you hear me?
Hello.
Hello.
My charging is over, so joining through different mobile. Please accept it.
Alright. So I think it has to be like 4 minutes, 10 minutes really. Mm. So, 1 minute.
Hello.
Hello.
Bro, I'm joining through different mobile. Please accept it. My charging is over.
Yeah, I accept it.
Accept it. I'm not able to connect. It's showing connecting.
So maybe it's from your network, or you can see the list. You try again. So I'll say maybe 10 minute time frame, right? This is the example. I'm still waiting for it to finish. Maybe I'm pressing the wrong button. So this is the entry. Yes, you can see this is the dodgy. This it here sure it's 10 minutes. It's 10 minutes. God, I can remember like when I executed it, I have zero drawdown. So I just like keep holding, keep holding. And there is only one section about the fundamental tipster. Mhm. And this is daily time frame. And if you can remember, there are some example at first that I told you like this one seems like other block. So this is the example here. You see in the daily time frame, this is just like advisedly don't go and be trading daily time frame. This is just like basic. You can see in daily time frame too, we have this dodgy. You see price come and respect it perfectly. We have this one perfectly. We have this one, stop loss. We have this one in daily time frame too perfectly. We also have this one, this doji. This is the doji, and you can see the entry there. We have our entry. So, and about the fundamentals, so zooming up, gold is always bullish. So in any country, maybe Palestine, maybe Ukraine, and like any time where you hear that there is a war going on this app, then gold definitely is going to be bullish. And can you please turn on your mic? I want to ask one question. Hello.
Yes, yes.
So please can you open your phone, enter Google and search when Palestine and Hamas and Israel. Ask Google when did Hamas attack Israel and tell me the
I
date.
think it was in a November, something like that. Just a moment.
You say when Hamas attacked Israel, what is the date?
7th October.
7 October. So let's see what happened on 7 October 2023, right?
Yes.
So let me show you what started happening on 7 October 20. When the war, that's the first date the war started. So forget about the body. This is Tuesday. This is what? This is the date. This is the zone bar. 5 October 9. This is the area, right?
Yes, yes, yes.
So you can see this is 7 October, and you can see from that day to date when this war is still going on. So this is what keep happening to gold. And you see from that date, and there is big reason behind it that like nothing can change that. During any war in the country, in the whole world, gold is going to be bullish. The reason is that every country is fearing of one war is going to start World War Three. So when World War Three started, there's going to be any currency is going to be invalid, it's going to be demolished. Like any USD, Euro, any country, because like the world is going to reset. So the only currency that is going to be acceptable after World War III is going to be gold. So that's why when every war started, every country will rush and keep buying gold in their foreign reserve, so that in case if World War III started, in their foreign reserves they have gold. So as they are buying it physically, that's why it's reflecting on the chart.
أفتكر تمام.
So now, like on Monday or like weekend, you just open your news and you see like this country attack this country. So that day or that week, just buy gold. Just keep buying. And the second tip is like anytime you hear like something negative happens to America, every time something negative happens to USA, just buy gold.
Yes, yes, I see it when Ukraine, Russia was in the Ukraine. It is starting growing up, and I remember it.
Mhm.
That's a war, and something happened with the dollar. It's always growing gold.
Yes, that's why if you check my Instagram following, I'm only following Wall Street Journal because I check news every day and see what's happening today. So anytime I see a news, I ask myself, is this news positive or negative to America? So after I have my answer, then I know what to do. If it is negative, I'm buying gold. If it is positive, I'm selling gold. But it has to be high impact news. Because like that time when China released DeepSeek, I was there busy buying gold and it is just going up. And then America's stock was going down.
How about sell positions? You are working on a sell or only buying?
Yeah, it depends. If American news is positive, then we are selling. If it is negative, then we are buying short time.
Okay, I understand that you are marking that in a big time frames like monthly or 3 months K levels and putting watching 4 hour or 15 minutes dojis and waiting to retesting them in a prime zone in a premium zones waiting and entering. Yes,
Yes, sure.
okay, I got you.
So now first thing when you open your chart now,
How many
you start like don't focus that the first lesson price delivery is just another tip if you didn't get fundamentals of getting direction. But fundamentals direction is always correct.
how many persons
Fundamentals
your
that's you.
how many persons you're risking from your account?
You said, how
How
do I calculate my risks on my accounts?
much money you how much in your money you're putting on a one trade like a percentage?
Yes, so I changed the reason why I'm flipping account and like trading like I don't like I would say I would call my trading style maybe reckless to some people. Some people call it reckless. But what I did, they told you risk what you can afford to lose, right? So me I changed the statement. I changed the statement from risk what you can afford to lose to deposit what you can afford to lose. So every deposit for me personally, I every deposit I made is for one trade. If that trade wins, I flip my account. If that trade lose, I lose the account. So I deposit what I can afford to lose instead of calculating percentage to risk what I can afford to lose. No, I deposit.
Okay,
Now if I
understand.
have my setup, I'm only depositing for that setup and I'm going all in for that setup. So if I
Okay,
have sniper entry, that setup is flip.
okay, I understand you.
So because like emotionally you can deposit 100k 100,000 and you say you'll be reaching what you can afford to lose 2%. One day, one time, emotion will trigger you to like mess up. Like you say I'm risking 2%. That's what I can afford to lose. So one lose can make you below the whole 100k. You know how this thing works. So that's why I find it very risky to deposit big funds because psychologically, if you have psychological mess, you are going to mess up your account.
Yes, yes, it's
So that's
very.
why I can also advise you if you backtest and get good in this entry and you are seeing results, seeing sniper entries. So change your shift from depositing big funds. If say you want to deposit, you want to risk $200, just deposit it for one trade and just go all in. So if that trade, it will determine if it wins, if you come out with 2K, 3K. If you lose, that's what you can afford to lose. You deposited it, you go all in. That's why to me personally, stop loss is useless because I'm not calculating risk. I'm going all in.
Okay, I got you.
That's my approach. So instead of depositing, I would like let's say you have $10,000 for trade. You want to like grow it. So for me, instead of depositing that 10K and be calculating, I prefer to deposit 1K in 10 accounts.
Yes, yes,
Each trade one setup. So one win can flip my account.
okay, I
If I
understand.
lose nine and win one, that one can cover everything. So that's my approach. So let's say now you want to start it with $1,000. Split it into 10 accounts. Put 100, $100 or five accounts, $200. Go all in. Out of 10, you have to win one. If you win one, you flip. If you win three, flips. Mm. And if you have good week,
How
you win
about
like let's say five or six.
smaller time frames? Did you want to enter model? Did you try to enter in a smaller time frame, like a minute, 1 minute, 2 minutes, 5 minutes?
Yes, yes. Like that's my core time frame. That's my main time frames. Like 80% of my trades I took them in 15-minute time frame, and as I show you many multiple examples there in my 15-minute time frame. And after 15-minute time frame, like 15-minute time frame is not my best time frame. My best time frame is 5-minute time frame because drawdown in 5-minute time frame no fee blow accounts, but drawdown in 4-hour time frame your trade can work out, but your account can be washed.
Uh, but your strategy is better. That's why you are, you know, in a higher time frames through directions, and you're waiting just till retesting prime zone. It's good for step step for, I don't know how to explain it, to stable work.
Like you can type the question.
You, it doesn't matter how fast you are growing. It's just matters that you are growing your account. Yes, it's only my my account going like like American uh,
You said
my account only going up down up down. It's not going to straight results because of I am not following true direction. I only want to earn money, don't follow true direction, and always play like buy sell. It's not correct. I understand that your with your strategy that you are following only true direction in a higher time frames.
yes. So now you see you have to change your approach. You have to change your approach now.
How how much risk reward you took?
Yes, I told you I trade like risk reward is for those who calculate in percentage. But for me, for my setup, for my trading view setup that I send to the Signal group is always 1 to 3, which means if you are calculating, you are always going to have 1 to 3 risk reward, which means like you are going to risk $200 to get $600, $1,000 to get $3,000. But for me, that's for my VIP members, the one that are following my charts. But for me, I flip.
You know, my psychology is not good for waiting, like price coming to prime zone. I'm also playing with the
You are
money.
very aggressive.
Yes, yes. That's why I blocked many times, many money. Uh, I learned many strategy, but all of them making needs that you are be will be patient. Will you patient? Don't hurry up. It's okay.
Yes, so I will give you one advice that will help you through that. Always trade setup, trade trading view. Like for me personally, I'm like if I execute trade, trading view setup will determine if that trading view setup hit TP, that means I win. If it hits stop loss, I lose. So you too, if you stick to trading view, you don't trade without trading view setup, and it has to get to your entry. So when it gets your entry, to trick your psychology, you can even like not open your MT5 at all. Just keep looking at the trading view. So if the trading view hits stop loss, you already know what happens there. If it hit TP, you already know what happens because if you are keeping your eyes on your MT5, you are going to make worse decisions. Can make you close. Maybe you are in profit. Fair will tell you close, close. Or you're in stop loss, close, close. But if you let trading view do the talking,
Human
then you are
factor.
safe.
Human factor. In a stressful time, we are making stupid decisions, which can blowing, which can be faster blowing our accounts.
Yeah, that would change.
Okay, I got you, bro. I got you.
Sure. So now we're going to round up. So if you have any question, you are free to just type it. Even if this voice note, you can send voice note with chat, and I'll
Yes, okay. If I have a question like for entry model or something like that, I will type you.
just yes, just type me, reach out.
Okay, thank you, bro. Have a
Thank
good
you.
day.
Have a good day. Bye.